Hey traders, this is Ron Haydat Market Tamer. Happy Sunday. Hope you're having a fantastic weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the spiders, the S&P 500 ETF, which I have a long-term bullish position in. Here are the previous highs. We're well above them. We had a nice little uptick Friday after basically a couple dojis in a row. You can see Monday, Tuesday, Wednesday, Thursday going nowhere fast, and then Friday we just launched higher, closed practically at the highs of the day, and even a pickup in volume. That all looks good. So going into this week, it's up and away right now. What I would look for though, if I zoom back in here, watch that red line. If we get a daily close below that 20-day EMA in red, that would be a sign to me that the bulls are losing some steam, some power. Maybe we go into some consolidation, or even it starts leading to more of a pullback. But right now, the red line is my litmus test. Now, if we go to the Qs, QQQ, they had a nice little pop on Friday. They're not at new all-time highs yet, but they are close. We go to the IWM, which is the Russell 2000 ETF. They did break out, and in fact, they broke out back on Tuesday, and they're just pushing higher. The mid-caps, your MDY, they're even bull flagging here at new all-time highs. They're looking good. The one index that continues to lag, and that's the Dow ETF, the Diamond, the DIA. Here's the January high. And remember, the S&P, is roughly all the way up there on a chart. We're still down here. So we're not breaking out yet. The 20-day EMA has been broken there and there, but then we quickly got back above it on a big surge in volume. I would probably go back to the 20-day EMA as a trailing stop. I have to use something, but I'd still prefer to use the S&P as the broad, as a broader measure of how the market is doing. But the Dow, it's lagging. It is what it is. You can see which other ones are doing better. But you put it all together, we're above all moving averages. The bulls get the edge. And then if you're curious on how the VIX is doing, $VIX, it's back sub 12. It's at 11.99. Now we'll take a look at some individual stocks here. Here's Netflix. And remember, from a seasonality perspective, this thing was an absolute rock star. It went bonkers. And then recently, it started to get in this downtrending channel that I had highlighted. And if I take that off, the target was down here near the 200-day moving average. Well, at that time, it was right around, let's say, 300. We got as low as 312. Or over here, it was even 310. Got within, 10 points of it. And now we're starting to move higher. Volume's coming in, it's a little bit better, and we have an imminent 5-day EMA in blue crossing up through the red line. If that happens on an end-day basis, that's a buy signal. And the fact that we're now spending time above the red line, the orange line is the target, that's your 50-day, and then we go back up here to the previous double top, which is in the low 400s. So as of right now, on a daily chart, Netflix is no longer bearish. If you look out over the course of maybe 2 months, is it still sort of drifting lower? You have to bring that into question now because you're above these moving averages. So I would say at worst case, intermediate term, it's now neutral, and we get above that 50-day. It's flat out bullish with a target up to here. So I hope that's helpful. Now here's a stock I sort of stumbled across, APHQF. Afria, I guess you could call it. It surged massively on Friday. It closed around 872, finished at 1073. If we clear this little bit of area, which is right around 1150, above 1150, there really is no major technical resistance until you get up almost near 1750 or so. The volume is absolutely massive over the past 4, 5, 6 months. If I wanted to use a trailing stop here, I would consider either the 5-day EMA in blue or switch out the 5-day, maybe go to an 8-day. And as long as it stays above that on an end-of-day basis, to me, that means the bulls are still hanging around. I can try to shoot for some of these potential upside technical targets. Now, AMD is a stock that is absolutely on fire. It had an earnings gap up in July, consolidated, and then volume comes in. And now we're fully outside the upper 2 standard deviation Bollinger Bands. When this happens, where we have a close and then a gap up and the full candle outside, it tells me that a stock has really gone too far too quickly from a probability perspective. I mean, look, it's going literally vertical right now, and that's really hard to sustain. Therefore, if I was short-term bullish, What I would typically like to consider, taking profits off the table, if I wanted to try to keep following it, maybe something like the blue line, 5-day EMA, or change it to an 8-day EMA, same situation, but this one overextended in the short term. It is on fire. Now Macy's is rolling over. I'm going to zoom in here. We had the gap down. We even broke those lows. Next major target was a gap fill down near the 200-day moving average at 30. We then try to rally, and look what happens. We run right into those multiple moving averages, the 5-day in blue, 20-day in red, 50-day in orange, and then we roll over on a little pickup in volume on Friday. The immediate target's going to be the lows at 35, $1.50 lower, but then it's still a 200-day. So we have a high here in June, late July, middle of August, and now you're getting a lower high. That's telling you the upside momentum has now waned. Best case, we're in a trading range. Otherwise, we're starting to roll over. Here's Walmart. Now, I brought this one to you guys a while ago, and I said, hey, keep an eye out for the earnings report, and hopefully the stock doesn't gap up into earnings, because the upside target would be that gap fill towards 102.50 and the previous highs back up around 107.50. And what happened? We had our gap up. It basically took the whole potential move, the big move out of our picture. It's too much too fast. Even though we didn't finish the gap, there was only about $2 left to go. But look what's happened now. We got us a high of $100. We've dropped 5% over the last week and a half. The downside targets are going to be the 20-day in red and then a gap fill. All I'm looking for now, if I wanted to consider being bullish, would be a close up on equal or higher volume than we've been seeing lately. That's all we need. I want to see a close near the highs of the day and at least some average volume. And then I could quickly transition into a 5-day or an 8-day EMA as a potential trailing stop. This is a really nice controlled pullback. Volume for the most part has been dropping. And last but not least is NVIDIA, NVDA. This stock broke out new all-time highs. And volume is looking good too. I'll zoom in here for you. Just look at that. That's pretty impressive. And Friday sealed the deal. Short term, 5-day or 8-day EMA is an end-of-day trailing stop I could consider. Otherwise, from a fundamental perspective, from what I read, this still looks bullish to me, but that's just me. If it would get back below the 5-day in blue or the 8-day, if I switch to that, that's fine. That would end the short-term bullish momentum. But it would have to take out one of these lows, maybe post earnings on August 20th or something back here towards the end of June. One of these lows would need to fall before I would say, you know what, maybe NVIDIA is done for a while. It's going back into a trading range or it's breaking to new lows. And that right now is about $30+ lower. Another thing I could consider using is just use the 200-day, because over time this thing's going to start slowly inching higher and it's going to match those late June lows or even, from about a week ago. So anyway, NVIDIA looks bullish here on the technical picture. I hope you find this helpful. Be back with you with more videos this week. Have a great rest of the day. We'll see you next time.